know that some of the things that have been crossing in their main chart is the opportunity they need and the opportunity they have been looking for. Have you ever asked yourself a question one day? Why do I see this thing now? And I was sure that this is right, but you are not strong enough, you are not sure enough. You wanted to enter, but you don't know what asked you to stop. Then few minutes later or few hours later, you notice that the same direction you wanted to step in was the right place that the market later went to. And sometimes you will step into the market with the aim that I am sure that after this, that the next place the market will be going will be my direction. At the end of the day, you were expecting that after this very direction, after this little move, that based on these threats here, the market will come to this direction, only for market to move up to this place and never returned in a while. Why? In this video, I'm going to be helping you to see some of the possible minor, just as simple as anything, you will step into the market with just this little ideas I'm about to give you. You will notice what the market is about to do and you will take advantage of it. Follow me right in this video. I will show you from the current market, but let me just give you the little background of what you will see in the previous that will help you to detect the accurate movement of the market in the now. All right, watch this place, and watch the lines. Right here, I have white and the yellow on my indicator window 1. Then I have yellow and blue or whatever color in my main chart. Two of them, this yellow line crossed below the 10, which is this place. It steps below the 10. And from that 10 below, the market was moving as if it wanted to cross this line, but never crossed. So when the market crossed this line, the market started going up. Now, as one of the students I have asked me a question, how do I detect the accurate movement of the candle so that I will place trade with more confidence? And which is one of the reasons he paid for mentorship. All right, now listen. Sometimes your wish is for you to place trade from this angle, that since you have tried here and all of them are bearish candle, that the next move will be from this direction, only for this to happen and the market break out from this angle and never returned again or to this place. How do you handle that and what can I do? Use this strategy and see the miracle. First thing first, let's zoom out completely. Do you see what we did now? Now, when you zoom out completely, what is the market saying? Ask yourself one question. What is the position of the market? Is the market trading up or is the market trending down? What was the last breakout? What I mean is that this is how the market is. Now, the market is trending upward from 1 hour time frame, and this is volatility 75. I'm using it as a case study, and is going to be applicable to everything. Don't worry, I will show you the same thing on crash, the same thing on boom. So I'm using volatility to show you that this strategy can work for all these things. Now, watch out what I'm about to show you. The market step in here and step up to this direction, and which means that watch from this angle. From your last zoom, which means zoom, I don't know, just zoom it out so that it will come to the smallest size, Now, how do you know that the market you want to detect is at the right position? When you are shifting your screen, the one that is accurate will not be shifting at the same time. That is when to know that this market has finished selling, that buying is about to take over. So if you are selling, you must be careful with this because the market has finished selling. So for all of you that are trading on volatility VS, that you want to know how to trade with volatility 75, 25, 110, or even 200 or thereabout, how do you detect it using this? As simple as that. Watch your indicator window 1 using this strategy, zoom out completely. Then when you zoom out, shift it, it will remain the same place. Shift it. I didn't say shift it up like this. I said shift it in a horizontal direction. In horizontal direction, shift it, it will remain the same. When you zoom out completely, then use time frame 1 hour. That is the first step. Zoom out and zoom out in 1 hour time frame. Remember, follow the instructions carefully. Now, when you zoom out completely, it will help you to see that actually that the market is moving up in this direction. So if you follow it, you will see that this market started going up like this and touch here and come up like this and touch here again and come up and now in this place. So what this means is that when you try to balance it, this is what you will see, which means the market touched at this place and started going up, and when it touched to this place again, it started pulling down and trying to go down again. It didn't work. It later came back to 90. So as it touched 90 again, the market pulled back. But that doesn't mean that the market have changed or that the market have reversed. This is one thing you should know. So some of you will place trade at this direction with the aim that the market have reversed. It only reversed for a few hours, not a complete reversal point, like the one that reversed to this place, that took the market to this place. Get that into your mind. It will help you to understand the market clearly. So what you need to do and to understand it is that once the market gets to this place, all of them touches these 10 levels, you are getting ready to buy. But don't buy immediately. Wait for a cross in this place. Wait for a cross. When this thing comes up here, wait for this agreement. This agreement will help you to detect the previous spike or the previous resistance zone that will give you the confidence that the market is about to pull up. If this crossing happened again, then be sure that you are good to go. As simple as that. This is my market and this is volatility. I'm using this small account to build up again. This is it. Can you see that now? So we don't show you what we don't practice. We'll practice and we'll show you with proof. We'll practice and we'll show you with proof. Do you get that? So each time you watch the market comes up in this very direction, this is one thing you should know, and this is one thing you should do. Now look at this market. I entered this market. Look at this. This is volatility actually. This is volatility. I watch this market take up from this very direction. So when I entered the market, I followed this place. So as it have come to this point, I entered at this direction. And ever since then, the one that tried to come near, that wanted to break out from my market, is this place. And if I wanted to add up my stop loss, this is where I should have added up my stop loss. So I didn't add up my stop loss because I was planning for a long range of markets. So it was a long range. So I don't need to stop the market because I want this market to stay for a long time, because from the target I have in the day trend, I was aiming that when this candle will open, it will come up to this place. So, and if I should place my stop loss and my TP here, the market may pull back again, which may force me to close the market. So that is why I practically leave it empty, so that if what I'm seeing is not giving me joy, then I will close my trade. And remember that the market has stepped into 90. Then what is remaining is for it to come up like this, which this candle have showed a move. So this candle have showed up a move, and as this candle have showed up a move, the next candle that opened up, which is the today's candle, is moving also in line with it. Look at it. So as this thing is coming up to this place now, if this thing should peradventure cross over to this place, which means the candle that will be trending tomorrow will be purely bearish, and with that, this market you are seeing here will be around 80 something dollars, 100 something dollars. I'll also do the video and show you the proof. I will also do the video and show you that this is that thing I was telling you in my previous video. So when we do things, we'll follow markets, we'll analyze market, and technically we'll get the pure result. That is how things work. So what are you going to do? Follow what I asked you to do. It's very, very simple. So it's very, very simple. So someone may ask me, then what should we do when we are using our small like 1 minute time frame, or 1 hour and 5 minutes time frame, 1 minute time frame? Should we use this strategy on our lower time frame? One thing you should know about small time frame or lower time frame when it comes to volatility is that lower time frame can complicate issues. Like presently now, this is what the market is doing in your lower time, in your 1 hour time frame from here. Do you know what this means? It means that in 1 minute or 5 minutes time frame, what you see is just zigzag movement like this. You can't detect the accurate direction, and this is why many people will lose trade at this point, because they will enter trade with the aim that is about to go down, it's about to go up. If you are trading volatility, don't rely on 1 minute time frame, 5 minutes time. Always see your entry point from a higher time frame, because that is what will give you the accurate results. So that is why some of you will place trade using $10 with your 5 minutes time, with your 1 minute time frame, only for you to see one straight move against your trade. You will rush and close it, because you never known that this is how it is. The candle that is pushing that 1 minute time frame is from a higher time frame. Always get that. Now let's see our crash. Let's see our crash and see if what I told you is also applicable to other market. Now look at it. This is the market that step up from here to this place. So as the market step up from this place down to this place, let me just use the current market of the day so that it will not be confusing. Now this is the current market of the day. I zoom out completely. Once I zoom out completely, I will show you the truth. Here, this is where the market changed direction, and this is where the market changed direction, and the market pulled to this place. The same thing applicable to this place. Now, what are we waiting for? We are waiting for this very market that touched to this place to come up here. And if this thing should come up here, this very yellow line you are seeing will reverse and come to this point. Let me give you a diagram from this point, and this one will also come to this point. By so doing, it have broken out from this point, and your entry point is from here, and your entry point is somewhere here. That is how market works. So at this point, few minutes from now, after watching this thing, I'll be entering for spike on crash 1000. That is how things work. Then this one can also help you in 1 minute time frame to detect how the market goes. So how do you trade this using your small candle? What you do is you zoom out completely like this, you zoom in completely like this. As the market touches to this place, since it is now on the spike zone, you enter for a spike. Each time the market is getting closer to a resistance zone, which means the strength of the momentum and sellers, the strength of the sellers is more stronger than buyers now. So each time the market comes across the last buying zone, they will pull back again. So that is why sometimes you will see most of the market, the previous market will never allow the coming up market to cross it. They will pull back. So that is why sometimes you will see a market in this direction. That is why you see the market in this direction. Just get that. So since the market is on a bullish, bearish movement, the strength of sellers are more stronger than buyers. So they always put the market down. So don't joke with these opportunities. So when you want to do your scalping, you look for a positive entry point that the market have touched to this place. the market have touched here and have crossed here, you can take at least 10 candles and you rush out of the market. Don't be greedy. It's as simple as anything. I mean, as simple as that. As simple as that. You can place your trade and jump out of the market. That is how market works. So, boom, 1,000. Let's see it. Boom, 1,000. Do you see what I'm telling you? How do you know that the thing is sure? Each time you are moving it, the market will not, the line, this place will remain strong. Do this in 1 minute time frame. Do it in 5 minutes time frame. Do it in 1 hour time frame, depending on the one you want to trade with. Once you are sure of it, look at it. As this thing touched to this place, it remains strong. Check the market and place trade immediately. You will definitely enjoy your market. Look at it. So shift this market is not shifting anywhere. Look at it. It's not shifting anywhere. Look at it. It's not shifting anywhere. That is how to know that you are in the right track. Look at it. It's not shifting. Are you seeing the current market is not shifting? So what is remaining is for you to go, start going, moving down like this. But as a trader that have seen this bearish candle moving and you have seen these previous ones moving, that is for you to know that it should go down. And the next place that you should be a little bit careful is here. So when the spike is going to this point and get here, close your trade. If a spike can break out from here, then that is to say that it will not reverse and come back here again so easily. The next target is here. After here, then it should be here. When you finally break out from here, that is to say that you have a lot of market to enjoy under spike, which is bullish movement. That is how simple this thing can be. I don't know. Let's see, boom, 300. That is how market can be. Look at it. So once you have seen this thing, then expect the candle to be in your favor. As simple as that. This is how the market is. So I still show you proof. This is how the market is. Watch this place. This is how the market is. So you too can do it. And you may ask me, what are the indicators that you are using to do this thing? It's as simple as that. The first one I'm using is 25. This time, not exponential. This time is linear weighted. Linear weight and weighted close. This is what I use. Then apply it to anything. Style is your choice. Your color is your choice. Then this one is 80 linear weight and weighted close HLCC4. So you choose the pixel of your choice. Then the indicator window one is relative strength index, which is RSI. You just screenshot it and follow it. I believe that some of you have grown up. This is 50. This time is 50 linear weight and weighted close. Choose your style. Then the last one is 25. That is what I have. That is the indicator window one. That is what you have on the screen here. This is what, this place, this is what you have here. So apply this. If you cannot do this, then please, if you are not too conversant, don't do this with your live trade. Practice this on your demo. You will get the same result. Then be serious with demo. Then when you step into your live trade, though live trade is kind of have pressure more than demo, but depends on the mindset you have. If you can trade with demo with caution, then you will be more serious with live trade. My name is GDFX, signing out.